Is now the right time to invest, or should you be holding cash? A lot of people that I see, particularly retail investors, right now are holding cash, and I don't think it's the right choice. So people are waiting to see what's going to happen. But if you have money in the bank, inflation actually right now is 15 to 17%, according to Shadow Stats. And if you're holding cash, you're losing over the next 2 years around 35 to 40% of your cash cumulatively. Something to really think about. A confused mind says, I'm not going to do anything. But this is the thing you need to understand about inflation. And Ronald Reagan has this quote. He says, inflation is as violent as a mugger, as frightening as an armed bandit, and as deadly as a hitman. It will wipe out your wealth without you even realizing what happened. So there's two real approaches. There's the Grant Cardone, go invest till you go broke. And then there's the ones like just hold cash and wait till things go on sale. And I've heard investors say both, right? So I want to really touch base on this and talk about why I think it's way better to invest now than it is to just simply hold lots and lots of cash. So we're going to go over this in 3 simple steps. I've got an awesome quote for you at the end. Let's jump into it. Okay, so a quick disclaimer, I'm not your investment advisor. This is just my opinions. I wanted to tell you something that happened when I was 8 years old. My grandmother really, did a favor for me and said, hey, let's go down. We're going to take you down to a local bank in Seattle where I grew up. And I opened up a savings account. You may have had a similar experience. Maybe you had a relative or somebody, or maybe you didn't, but at some point you opened your first bank account. And it was this noble thing, right? Saving is going to get you to your financial goals. Well, you know what? It's not true anymore. I'm sorry, Grandma. It's not true anymore. I'm grateful for the lesson, but saving is losing. When you're in a high inflationary environment, saving money is losing money. We talked about that, 35 to 40% lost over the next 2 years. So just think about how much money you have just sitting on the sidelines, incredibly high holding cost for that cash. 15 to 17% a year. That's a pretty good return on an investment. We see those often on our investments, like this one behind me, these multifamily investments or higher. So it's like you're getting a negative investment, right? You're not only are you waiting, but you're getting a negative return versus getting a positive return. So it brings that to like a 30 to 35% swing in what you could be getting versus what you actually are getting. Anyway, saving is losing. Let that just sink in as far as if you have money sitting there, what's going to happen? So what about Bronson? What if things go on sale, right? What if things go on sale and all of a sudden prices crash? Personally, I don't think it's going to happen. I think we may have some modest reduction in prices on certain things, particularly single families, but there's so much cash in the system. I mean, we created 40.9% new currency over a 24-month period during COVID, which is insane. And there's just trillions and trillions of dollars just sitting there waiting. So I would say right now, saving is actually losing. So, what we do with a multifamily deal, even if it underperforms, we're still hedging inflation, right? Because rents and inflation, there's a chart you can see that basically keeps pace with inflation. So as long as the rents, which are really what determines the value of the property, keep pace with inflation, you're going to be in good shape. So, you've heard it also said to invest in inflation-hedged assets. But there are some assets that say they're inflation hedged and they're actually not. Well, what do you mean? Well, there's something called Treasury Inflation Protected Securities, which are TIPS. And these are Treasury bonds that say that they will keep pace with inflation. But the official rate is 9.1% or around there. If they pay you that and inflation is actually 15 to 17%, you're actually still losing money in real terms, which is something that's really important to think about. Now, I wrote an ebook about this that I really want you to check out. It's in the description. It's how to take advantage or how to use inflation to your advantage, right? So you're not just somebody who's passive, who's holding cash. A lot of people, when they're afraid, they just kind of sit there and don't do anything. This is a guide that talks about how you can get into certain types of assets. You can use debt. You can basically help to grow your wealth, make inflation your friend rather than your enemy. So check out that. It's in the description below. All right, so the second thing is to invest in inflation-hedged assets, right? So what does that look like? Well, if you see, I showed you the chart of rents and inflation. They generally go hand in hand. If you look at what's happened with the supply of money, it's dramatically increased. So as inflation is there, it's going to cause rents to rise with inflation. And why is that important? It's because single family and multifamily and the commercial in general is different than single family. Meaning a house, if I sell my house, the price is determined by what other houses in the area have sold for. It's not necessarily the case in commercial, right? It's dependent on the income, how much income you can produce. So if the income, which are the rents, is just generally going up because of inflation, being there can be a great place. So where are rents and values going? Just like I said, inflation is here to stay. It's going to keep happening. It's a special time in multifamily. The interest rates are far below 15 to 17%. As long as your interest rates are below inflation, you're actually doing pretty good. So if you're, I think 4.5% to 5% is kind of what we're seeing in large multifamily, which is amazing. And we're able to see that for a long period of time. So there's this phrase called inflation-induced debt destruction. My friend Jason Hartman talks about it. Those are people that talk about it as well. But it's talking about what happens in a time of inflation if you buy assets correctly. You buy a house, you buy an apartment, you buy something with a lower rate than actually what inflation is. And over time, you're gonna pay off that piece of property with future dollars that are worth less, right? So you basically get two benefits. You know this property is gonna be worth more over time due to inflation, but you're able to pay the same amount, which actually means the nominal dollar value, the real dollar value, is gonna be worth less, right? So it's a double positive. So I love being in debt with lower, rates that are lower than inflation and paying off with future dollars that are worth less. So, it's the time right now that, there could be a time where inflation, interest rates actually go higher than inflation. We're not there right now, but this is an amazing time to look at it. But a lot of people that I run a large meetup in Southern California, first Wednesday of the month if you're ever in the LA area. And what I find is that a lot of people, including myself for years, have had analysis paralysis, right? Just saying like, I'd love to do something, I don't know, and they just kind of, confused mind will always say no. But this is really the time to really enter in and figure out how you can educate yourself. And then, I think the real thing is I wish I had started sooner, and I'm sure you might be at that place as well. There's a Chinese proverb that says the best time to plant a tree was 20 years ago, and the second best time is today. So that's something I want to encourage you with. And that really brings us right into the last point of waiting, not only saving, losing, but waiting is also losing, right? If I'm waiting for other things, I'm losing, it could be 30 to 40% or more of the amount just sitting there. So this idea of someday, you're just gonna invest all this stuff, there's a lot of cash out there sitting on the sidelines with corporate and other investors. And I would say don't be one of them. I mean, I'm 95% deployed. All my net worth, I have about 95% in deals because I'm using the cash that will be worth less in the future to buy things, and is it worth a 35, 40% haircut on the value of your dollars? Are we really gonna have that kind of a crash in these commercial assets? It shows, data shows us that it's between 6.8 million apartment units short. The National Association of Realtors had a study that came out a couple years ago that said that. Some would say it's closer to 2 million. Some would say it's even higher than 6.8 million, but we're short. We need more and more housing. And so the real estate market, there really is no real estate market. There are different parts of the market. And multifamily, like I see back here, I think is a very different type of asset. So something we're seeing an advantage right now is we were at the closing table, closing one of these big apartment deals, and we were able to negotiate a $1.5 million reduction at the end, which is amazing, right? So it's become much more of a buyer's market in a lot of ways due to interest rates going a little bit higher. So I encourage you to take a look at it. If you're not on our deals list, you really need to get on our deals list. We're seeing some amazing deals. We're having some investors join us, getting some great deals on apartments, primarily in Jacksonville, Florida, but also at other areas as well. So you can get on our list by just checking in the description below, going to our website and clicking the join button, and you can get on our deal list. We'd love to set up a call, start a relationship with you. But I want to share this with you. This is a quote that comes from Vladimir Lenin, who kind of really did a lot of damage in Russia. But it says this: the way to crush the bourgeoisie is to grind them between the millstones of taxation and inflation, right? So you imagine these two millstones coming together being ground, and it's grinding the working class, right? And it's taxation and inflation. And that's really what's happening right now, where inflation's high. And so I just encourage you to try to find ways to get out of that, to get out of the grind of inflation. And we did this video recently, this panel with 3 other amazing experts talking about your best inflation moves. Amazing panel. Check it out up here. I think you're gonna enjoy it. And then I wrote this awesome ebook, and it's called How to Use Inflation to Your Advantage. So that's in the description below. Download that, give some specific strategies on how to do it. It's a hot topic everybody wants to know about, so check it out. Thanks for taking the time to educate yourself. Look forward to seeing you on the next video.